is time for. All right. I have to let go of the singing voice. Maybe not my forte. mfc.ca, and that stands for Manulife Financial Corp. The more, man, I'm looking at the stocks, the more you get a feel. Maybe it's just the way I'm looking now. Combination of my biases, what I read, what I see. But all put together, Canadian banks not looking so hot. Lots of stage 3s, imminent stage 4 breakdowns for Canadian banks. Oil and gas, nice stage 1s, breakouts, stage 2 for oil and gas, and gold and silver. Well, they're just like teasing us with monthly candle breakouts, especially gold with that 1350 level on the monthly candle chart, and silver also. Copper, same patterns. Always they're trying to push out. And what else I noticed? Tech stocks, Nasdaq. They've had a great stage 2 run, starting to slow down. Either consolidation on the 30-week moving average, either beginning of stage 3s, and they're in the period now of a sideways move. So either you live with the whipsaws right now, up and down, but most big tech stocks, they're in late stage 2, entering stage 3 type territory. Doesn't mean they're going to continue in stage 3 and not and go down to stage 4. It could go in stage 2, but they've had a nice run up till now. So what I'm trying to focus on is finding stage 1s or 3s to be able to play breakouts stage 2 and stage 4 at the early beginning. I'm noticing that it's easier to get good momentum, good velocity off a breakout initially, or maybe after the first continuation breakout pattern or breakdown pattern, then trying to jump in on the bandwagon after there was 2, 3, 4 occasions of to get in. It's like my theory or philosophy of the closer target is the most probable one, the furthest target is the least probable one. And I guess the more you're along in stage 2, the least you had better chances of riding that if you got there at the initial breakout. So that's what my mindset is looking for. If you don't know what you're looking for, you stray. If you're precise, you're looking for that early stage 2s or consolidations. If you want to get ahead of the curve, you could start putting alerts on stage 1s and 3s. Eventually, they might explode to stage 2s and 4s, or if you're lucky, you just catch a stage 2 that's just beginning, or stage 4. Or the other case is it's already broken out, already in a stage 2, and you get to get in on the pullback on low volume. That's another good occasion according to Stan. So what now I did is I'm putting my default charting on the monthly candle. So I'm going to start doing top down just to make sure that I'm on the good side of the trend. If I see a pattern here, if I see a pattern here, I'm going to start identifying the way I do it with my classical charting framework. I could just put my alerts on the monthly candle. So this is the truest or truer resistance and support levels compared to smaller time frames than the weekly and daily. And right now it's smack. I should lower that. That's probably going to get triggered tomorrow. That's smack on the breakdown line right now. Really down on it. 10-month moving average trying to go over. So this looks like a top right there on the monthly candle chart. If I wasn't doing Stan, I'd probably do it's my classical way. Probably do an alert here, and an arrow there, and like I usually do, I like doing both scenarios. I always look at both, but since I'm closer to the create some black space. Since I'm closer to the breakdown line, that's the most probable scenario for now. And we could see how the chart morphs if ever that decides to bounce back up towards 27. So breakdown, close below 23, and continuation to the top, close above 27. So right now, I know I'm close on the monthly candle of having that breakdown, and it's going to help me decide if I have the momentum on my Stan Weinstein. Just look at the ADX. If it's under 20, I know I've been in the stage 1 for a while. And right now, we're stage 3. And a while back, it started getting momentum and trending high. And now it started to trend low. Is it going to cool down and come back under 20 and show us a consolidation period of stage 1 or 3? Don't know. But the ADX, I'm not trading off it. I'm looking at it to see if eventually I could use it as a good identifier and a screener. So any value below 20, I could look at it and they should be in a stage 1 or in stage 3. So right here, see it's under 20. Does that look like a stage 1 to you or stage 3? It looks pretty tight, right? So that's the type of indicator I'm going to use it for. So what do we have now? Let's center this. And this line is below 30-week moving average, starting to go down. We have the Ichimoku cloud, which is about to evaporate. We don't have much left. So a breakdown candle that would bring this down right at close below it. It'll be awesome. Let's put the alert right here at where the support would be. The final support until we could go all the way down. And if it passes through that, I think we're good. You could easily bounce on that, maybe go up. Who knows? You don't want to get trapped. You don't want to get in too early. And see this resistance here. This support here is this resistance that was created. This support that was created back here, projected in the future, 26 periods in the future. And we're going to keep an eye on that volume. And hopefully we get a weekly candle volume that has twice the average of the previous 4 weeks. And I don't have the Mansfield indicator as Stan used, but I have the RSI. And hopefully the RSI is gonna be trending over the halfway point, trending towards going towards in the negative territory, going towards 0 right there. So that's how MFC setting up. I'll look back here. Okay, so the alerts are there. I could put even a tighter alert here just to get back my attention if ever the price action goes maybe back above these levels. But for now, I think we're pretty good with the alerts. Definitely get back to that one. I just want to see how this looks. Look at that nice stage 2 I had here. Wow. See, back in the days, let's practice a little bit. Let's do it old school. All right. I know hindsight's 2020. Hopefully my memory's not good. And let's imagine we're just back here in those days. I would have identified maybe the bottom formation right here. I would have put my alert at around the right here, close to the 14 level. And let's see what happened. Oh! Okay, right now we don't have the volume. There was good volume here on this candle right here. But what we don't like is it's not above the Ichimoku cloud. The RSI was going upwards. So I'm wondering if this was the breakout candle, because according to Stan, this could have been Oh no, he would have drawn it here. This is really the more visible of the patterns. Let's move, see what happens. Oh, there you go. There's a look at that candle. This one right here. So if you wouldn't have gotten here, because let's say you didn't know about the Ichimoku cloud, and you would have drawn a launching pattern here, and you would have said, this resistance is too far away. That's why the cloud's pretty good, because it really forces you to visually to see that potential resistance on the way or support. And if you want to omit it in your brain because you really want to get into a trade, then it's really in your face right there. And we could have gotten right here. This could have let that breakout go through. And right here, this candle right there, you could have said, oh, okay, this is my definite breakout. Above the breakout line, above the Ichimoku cloud, 30-week average really starting to angle up. Stan always says the stock makes a 40-50% move before you get in the good moves. And look at that, from 10 to 15 is about 50. It is for 50%, and now you have the volume to get in. Let's just see right there. I just want to go see on that moment on the monthly candle chart how we would have dealt with it. And let's see right there. So it's on the monthly candle chart. We had our breakout line here for the pattern, the base. Remember the patterns on the breakout lines? They're usually lower on the monthly candle chart because that wick is what I consider noise. It's that weekly and daily and whatever smaller candles price action that happened during that period. But the monthly candle sucks up the price. Market says that's a more important resistance or support. And you got to respect the higher trend, the higher candles closes more than you do the weeklies. Sometimes they coincide, but most of the time usually they're tighter and closer. See here the bottom, the actual pattern right here for the support's a little higher. So sometimes if you have targets on the weekly or daily and you don't go look at the monthly, or then eventually look at the monthly, you'll see that you might run to the support and resistance, and it's good to make sure you're on the good side of that. So whatever targets you have on the weekly or daily, look at the monthly where the support and resistance would have been, and just cheat on the target for you. Just reduce the target, reduce your reward just a little bit, but just to make sure you get a profitable trade and you don't get bounced off that support or resistance before you get to your target. Either way, here we have a nice classical chart pattern base, double bottom. Breakout candle was 1 month before, but we didn't get in because we didn't have the volume. And then on that second candle, you get the volume that we wanted. A+++. I don't know how many pluses you could put on that there, but we would have been in at that level. Let's back it up. Whoa. Whoa. All right, let me back up there. Back it up. Hey, sorry. Okay, here we are. Here's where we would have been today. See, on the ADX, pretty low, close to 20. And that's a signal of a nice base right there. All right, take that out. And off we go. So we're in right here at this level. Just explode that a little bit. All right, so we're in. We got in right here. All right, sell stops. Enter here. If you're an investor, the sell stop, you would have been at the bottom of the formation right here. Traders, I'd put it below, right here, below the 30-week moving average, below that support of that smaller launching pattern. And make sure that you size that to equal, if ever you lose that, it goes that shouldn't equal to more than 1% of your NAV. So buy the appropriate position size to make sure that that value from 15 to 1150 or 1145 or 49, you just want to be around that round number. Make sure that's less than 1%. All right, candles added. Let's go. Let's apply the trading framework. And remember, usually you have a pullback within 1 to 3 months. And check that out. 1, 2, 3, 4, 5, 6, 7, 8. 2 months, pullback. And on smaller volume, that's the way you want it. Very healthy. So if you see that, you didn't miss it. You didn't get in here. Or you could have seen that here. And you say, okay, I'm going to put maybe half a position here. And I'm just going to wait for the pullback. Because that's what you have to accept. Once I started to identify, I started using volume. Because on my classical charting pattern, trading framework, I don't use volume. But once I start using volume, especially for stocks, Forex, I don't have access to volumes on my TWS. But for stocks, it recomforts you knowing that's what you look for. There's a pullback, but instead of saying, no, it's a fail, I made a mistake, the pattern's I'm no good, whatever. Just on the days that it's negative after you get in or it pulls back, just look at the volume. And if you see the volume has shrunk, it's a very healthy sign. So you should be full confidence. Instead of starting to panic and saying, I'm going to raise my sell stop, I'm going to get out of the trade, you should actually inverse, and that's the hardest thing. And I think that's what successful traders are able to do. Inverse your thinking, because successful traders are probably able to do that because they have a game plan. They've seen it before and they have a plan for that situation. So for pullbacks, they know when it's healthy or not. And then they're just waiting for it to be able to get back in when there's a pullback on the low volume. And Stan talks about in his book, this is a great opportunity to get back in. And I guess that's to help the psychology. The more you have an action for X event, a Y action for X event, the less you'll fear, and the more you'll be able to anticipate and get in when it's time. So right here, good time to get in. And you could probably put your sell stops the same way that you did for the traders and investors way. Keep it up until it's time to move it up. Price action went back up. That's your first pullback. Traders below the pullback, investors below the pullback, below the 30 moving average. In this case, they're both the same because they're both below 30 moving average, below round number. And let's check it out. Here I use the RSI if I see the V, it helps me identify the pullback where it occurred. And you have to wait till the price action goes back up towards near previous highs before moving up your sell stop. And yeah, a lot of work. Let me move. Let's move that. Okay, let's draw the line. Start drawing trend lines. Okay, here's my first trend line. And eventually, if I have other bottoms here, I'm going to start maybe drawing more aggressive trend lines if the situation arises. And look at that. You could have a chance for a continuation. Sticking that up. Continuation buys right here. Look at that volume, twice the average volume of the previous 4 weeks. Could have probably added some more. The price action going sideways towards the 30 average. And it's a good place where it bounces. Even here, a double whammy, bounces off the 30-week moving average. Nice sideways move. That was just screaming, get back in, because of the shrinking volume on the pullbacks and the increasing volume on those green candles. Very healthy. And off it goes. So after that entry here again. And here we go. Pull back. Price action goes back up. Traders below that pullback, below the round number. Investors below the pullback, below 30 moving average for that extra protection. Under $20, round numbers are half dollars. So instead of if this is If this would be just above 1550, 1555, you would put it at the 1549 or 1545, just to make sure if ever it gets back down, you're on the right side of that. And all right, I'm still good for that. Let's move it up. Oh, sorry about that. Let's fill up, moving back. All right, here we go. Price action goes up. Pull back. See, pull back here. Price action hasn't gone back up. But what happens here is it's tracing 1, 2. Am I getting a new trend line right here? Remember, a bottom is red candle, green candle. And then after that, you could say that's a valley. 1, 2, no. So I can't connect 3 dots. In technical analysis, connecting 2 dots is a valid trend line. Stan wants 3, and he wants a break on the fourth one. Price action is not going sideways move. 1, 2. Am I getting it? One, two. No. Price action, okay, has gone back up to previous highs. So what happens here? You see the V. Go on top. Traders below the low of that valley. Investors right below 30-week moving average. Look, the trend line is lower than the 30-week moving average. We could leave it there, but we're gonna be bailing out anyways when we violate the 30-week moving average. And let's see what happens here. And there's a lot of details. We could have kept noticing it if the contracting volumes after those explosions, contracting volumes. This is not super healthy. This red candle right here on the pullback. Green volume picking up. So there could be some signs of slowing down right here. You gotta listen to the signs. It's like somebody who's sick. Oh, volume increasing. Not maybe at twice the average volume of the previous 4 or 5 weeks right here. Bounce off the 30-week moving average, and maybe another occasion of entering right here. We're below the green cloud. Above the green cloud, sorry. That means we're in an uptrend. And pull back. So right now, look, Stan, I mentioned this before. Stan, you want pullbacks below 7%. Doesn't consider them. I'm more eyeballing it on the depth maybe of the pullback, how it is, how well defined it is. You can notice maybe with the RSI. That's a hard one. I don't know if there's like a special number. Maybe with the ATR. I keep saying it. I forget to practice it. I should be testing the ATR, the average true range per stock, to know what would consist as a good pullback, or what's just noise, price action noise for that particular stock at that particular moment. Or use just my human observation interpretations to see how it is, because it could be the pullback, but if it's on high volume, I might be more severe on it. Not sure. I have to can I connect 3 dots yet? 1, 2, 3. No, there's nothing yet. Only 2 dots, 2 lows. All right, so let's keep moving along. So I see could have had an occasion to add here on this big candle. Could have had an occasion to add here again. Right here. This candle right here. Could have added right here. And this is our breakout candle right there. And you could have maybe added on this candle here, but because of the Ichimoku cloud, better to wait. Whoa. Man, this thing's going up. Okay, pricing goes up, down. Are we going to get a... Oh, okay, here it is. So price action started going back up. But now, can we... I don't have my trend line. But we're getting close to the 30-week moving average again. Pull back, price action goes near towards volume, strong volume on the pullbacks. Might be getting close to a stage 3. And a lot of weeks. Those are weeks, right? Nice, lots of sideways move right there. And we have 3, 1, 2. So, okay. This trend line is useless. One, 2. Let's just pull it back a little bit. So here we could say this is the bottom. Green, get red, and then green following it. Could have said maybe 1, 2, 3, and that's your trend line. If you really want to be aggressive. And you had that pullback. Price action starting to go back up. But since we have that trend line going up, we don't have to move the sell stop right now. And there you go. Okay, so now you're out right here. Or if you waited towards the end of the week, you would have been here. And that's all right also, close to the top. If you weren't paying attention or you didn't want to drive that way, the trend line, no problem. You have your sell stops just a little bit lower. Let's see if they get triggered. Sideways move. And what's the low here? Low 1954. See, so we would have put the sell stop at 1945. 1967, 1970. And look, you're still in. I know traders, they should bail after. So traders that would have been out here, we don't tolerate at all the violation of 30-week moving average. So maybe even here on this candle, you would have been out. Or if you would have waited for a close below 30-week moving average, just a little bit lower at this one. Investors, you can choose to stay in if the angle of 30-week moving average is still pretty going high. But now, if you had the trend line here, that's a real sign that if there's a trend line violation and you bail, investors and traders take half the position off the violation of the trend line. And after that, investors treat their final remaining positions to exit as the investor as a trader would. So at the 30-week moving average, you would have bailed also. So here, I think everything would have been, you would have bailed right here at this level. Here is your profits. Right here in between the trend line violation and the 30-week moving average. Right about here for that position. And you would add another position here. Bring up to here. And for your third position, if you would have went in, right here, not that much. So that's not bad. And that's what I say, the further you get in, well, the less chances of making as much reward as you would at the beginning, and you increase your chances of getting whipsawed or not making it, not ending in the green. And that's a perfect example right there. But it's still good. You added on, you piled on, and you rode the stage 2. Could have continued. Now it was time to bail. Like, get out of there. You're in a stage 3 now. You're wasting weeks. Go back and try to find this. Go to find this setup. Here. That's what you want. You don't want this. Why stick around? Why? Because MFC was good to you? That makes no sense. Go back here. Get out of this mess. This is like warning signs. You're like your girlfriend's cheating on you there. She's staying up late. She's not at home at the same hours. This is like trendline violation. Warning sign. Get out. High volume on pullbacks. Warning sign. Get out. 30-week moving average violation. Warning sign. Get out. God, you could get lucky. You could bounce back up. But after that, what was the use? This is months. 1, 2, 3, 4, like 2 months, 3 months. You're just wasting your time. Instead of 3 months, you should be going up, not sideways. Sideways is almost a loss. And what happened here? Look at that. We would have wasted a lot of time. And nice top, nice stage 3 right there. And here we are after that. Breakdown. Look at that high volume. And right here. You could notice those candles right away. Which one is that? Oh. Or it happened right here. That's this candle here. That's just a continuation. And anyways, it's the same as all that. It's a good workout for me. Haven't done that in a while. Practice, anticipate. Get a plan Y for X action. And you'll be able to add on when it's time to add on and not get scared, not do the inverse. Follow your emotions, you're dead. Do the inverse of your emotions, you have a chance of success. Easy said, hardest thing to do. But having a plan always helps. All right, guys, MFC, you're set up. I have my alert set. And see you on the fall timber.